Hello, fellow investors, and welcome back to Borex Investing. So, today's video, I wanted to talk about the whole NVIDIA Google conversation we currently are seeing investors engage in. Specifically, I wanted to talk about what this chip competition means for Nebius, as they are a preferred NVIDIA customer. Also, I will give the latest updates on Nebius. There was a few things you might have missed this week, including a very interesting conversation that was released with CRO Marc Boroditsky. So, I wanted to give you my take on that. All right, let's get to it. So earlier this week, we learned that Meta is in talks to spend billions on Google TPUs, renting them via Google Cloud as early as next year, which is important because it would explicitly divert part of Meta's spend away from Nvidia. So because of this, a lot of Wall Street analysts are openly framing Google's TPU business as a direct challenger to NVIDIA's AI chip dominance. So this caused a sell-off on NVIDIA and a new all-time high for Google. However, I think we have to step back and think this through logically. So we have to remember that demand for NVIDIA chips is still absolutely insane and not going anywhere. Google has been, still is, and will be a buyer and user of NVIDIA GPUs. If Google pushes its own TPUs, which, by the way, have been around for over a decade now, over time, we could see a diversified hardware ecosystem where some workloads will run on TPUs and some on GPUs. But the overall demand for these chips, including NVIDIA chips, will still be massive. Right now, NVIDIA has a 90% market share on AI chips. So if that drops to 80%, but let's say the demand for their chips rises by 500% by 2030, which some say is a lowball estimate, this competition overall would be good for everybody. So let's think about this. When competitors started making touchscreen phones to compete with the iPhone, the value of Apple did not drop because Samsung, Huawei, and others started making smartphones. Sure, the market share eventually dipped for Apple, but everybody started replacing their old Nokias and flip phones with touchscreen phones. So the competition just cemented the leaders and created a whole new market. And let me just remind you, the same Wall Street analysts that are flocking to Google now are the ones which sold off only a few quarters ago and turned bearish on the company because they thought that ChatGPT and OpenAI would replace Google. So looking at Google now, it's like those investors never learned their lesson. Even Google research scientist Amir Yazdan tweeted the other day that the sell-off shows how clueless the market is about hardware and the demand. So speaking of a clueless market, even TSMC was down on the Google TPU news, which is hilarious because the market wasn't smart enough to realize that TSMC are the ones to actually produce the Google TPU chips. Literally, you cannot make this stuff up. But seriously, Nvidia will be fine and Google will be fine. There's enough demand for both of these chips to exist. All right, moving on. What does this mean for Nebius? Is this good or bad? Well, here's my take. So Nebius is a preferred level Nvidia cloud partner, and they were just recently elevated to reference platform partner. Their whole public stack today is Nvidia centric. They have large clusters of the H100 and Blackwells, and they just recently announced new Blackwell deployments in Europe and Israel. Nvidia also owns a small equity stake in Nebius, which symbolically ties their interests together. And remember, Nebius is explicitly moving up the stack with the Token Factory, which is their inference platform, and other software heavy services. So these are not tied to any single chip brand. Let's remember the demand for NVIDIA clusters is still insane, and Nebius already has multi-year contracted demand and is supply constrained rather than demand constrained. That means that Google winning some wallet share from NVIDIA doesn't suddenly remove Nebius's customer base, but it mostly changes who else is competing for future growth. I think NVIDIA, under competitive pressure from the TPUs, is more likely to lock in and favor its strongest cloud partners like Nebius, and maybe even give some favorable pricing. So with NVIDIA facing real competition, this competition will lead them to incentivized to keep cloud partners like Nebius very happy with better supply allocation and maybe more attractive pricing, which improve Nebius's margins in the long run. So as more companies experiment with AI, the total AI compute pie will get bigger. Even if Google takes a slice, overall demand for neutral NVIDIA heavy clouds like Nebius continue to ramp. Nothing today says that Nebius must be NVIDIA only forever. The real moat Nebius is building is in their data center locations, power contracts, network and storage architecture, and the full software stack and their engineering talent. If economics really tilt hard towards TPUs, you could even imagine a multi accelerator Nebius made up of NVIDIA chips and Google TPUs. That's always going to be an option. Their software would become the control plane that can target different backends. And in that world, what matters most is who owns the AI engineer and the workflows, not whether the metal is H100, Blackwell, or Trillium. So if Nebius decides to execute both, then the whole Google versus NVIDIA thing would just become less of a binary risk and more of a menu that Nebius can expose its customers to over time. So I'm bullish on Nebius because it is an AI infra and software play. And right now, the Google TPUs are more like background noise, not a thesis breaker at all. So, like I said, it could even be beneficial if it helps the company long term with margins. All right, so moving on, we know by now that the overall global power demand is rising, which is obviously bullish for Nebius and other companies in the space. We're now learning that by 2030, AI infrastructure demand could grow more than 30x. So, getting these data centers up and running is vital. And this week, we got new rumors of another massive Nebius data center, this time in Indiana. The site is rumored to be a new greenfield location in Frankfort, Indiana. Some early details are that the site is over 100 acres. It's about 600 megawatts of total power capacity. The site may eventually expand to 800 plus acres long term. So if this is true, it would be another large build out in the United States for Nebius. So remember, Nebius also just recently acquired some land in Alabama and just recently opened their Vineland, New Jersey data center. So the Indiana site would be the next phase of Nebius's US rollout and another proof point that their scaling strategy is real. So execution risk here keeps decreasing as every day goes by. Also, I found this quite interesting. So Amazon just announced 15 billion in new data center investments in Indiana as well. So this could be a coincidence or it could indicate that the region is slowly becoming a major AI infrastructure hub. Either way, Nebius being early in that area would be an excellent strategic advantage. So there was another piece of news that quietly slipped under the radar. I mentioned in a past video that this would happen, and finally it has come to fruition. So Nebius has now been officially added to the MSCI Global Standard Index effective after the close on November 24th, 2025. So index funds were forced to buy their required allocation, and we saw a 22 million share volume spike hit in one single minute as MSCI funds executed those buys. So I think this inclusion further legitimizes Nebius as a major global player. And I would say a realistic goal next would be NASDAQ 100 inclusion. So I think Nebius has a real plausible path to NASDAQ 100 membership over the next 2-3 years, especially if the company executes well on its expansion. So all in all, things are looking very promising, and I really do like these type of updates. All right, last but not least, the fellas at the Tech Alpha podcast, Alistair Mann and Daniel Koss, hosted Nebius Chief Revenue Officer Marc Boroditsky on their podcast. And it was an excellent interview. I recommend all Nebius shareholders watch it. Mr. Boroditsky provided some great insight. For instance, he believes that they were able to close their Microsoft and Meta deals because of their experience and proven track record with Yandex, which gives them tons of credibility. Mark also said that the real bottlenecks in AI aren't NVIDIA chips. For Nebius, the bottlenecks are land, power, and capital. So the real challenge is securing locations fast enough and connecting enough power to support all the demand that's coming in. And it honestly seems like they are doing well with that, so this makes me confident. He also pointed out that demand is so high that Nebius is literally turning customers away. So this is fantastic news, actually. essentially, it means that they are able to raise prices. And we learned that many of their largest accounts are more than doubling quarter over quarter. Mr. Boroditsky also said that he is very bullish on the inference. Their token factory inference platform is scaling extremely fast. So he expects inference demand to grow by orders of magnitude as apps get rewritten around continuous AI. So I think this is the wave that really will matter most over the next decade. Another point that he stressed was that Nebius is margin obsessed. He said margin is the number one metric investors should be watching, not growth. And long term, most of their revenue and profit will come from the software and the AI platform layer, not from the raw GPU rental. So this is exactly the same playbook that made the hyperscaler so dominant. So then he explained in his words the real moat that Nebius has. They're building a fully vertically integrated stack, hardware, software, and services, all optimized specifically for AI engineers. He really believes in his experienced engineering team and points out that this full stack approach is why customers are willing to pay more. He also made a really good comparison. The bare metal GPU providers and especially Bitcoin miners trying to pivot into AI, exactly the guys that he's talking about. Well, they don't have the deep engineering culture or the decades of experience needed to deploy and operate massive GPU infrastructure reliably. NBIS does because they already did this with Yandex. He then talked about the long-term flywheel. So Nebius wants to own the premium AI workloads and build a huge community of AI engineers who just prefer their tools. And in his words, this is exactly how Cloudflare became so massive. And fun fact, Mr. Boroditsky actually did work at Cloudflare before joining Nebius, so that's also bullish. By the way, side note, Colin, if you're watching this, thank you for the Cloudflare tip back in 2020. I bought Net after his recommendation back then and sold it at a 5x profit. So Colin, again, I still appreciate that one, and I never forget the friends who give me great tips. But anyways, going back, this interview really gave us clarity on Nebius' strategy, their moat, their margins, and their long-term direction. I highly suggest you guys check out the full podcast. All right, that's it for this week. If you found this valuable, please like and subscribe. And in case you missed it, I did upload a breakdown on Palantir's 5 biggest risks earlier in the week. It might have flown under the radar since it was a midweek release during the Thanksgiving holiday, but definitely check that out if it's a name that you are holding. All right, again, thanks for watching, and I will see you next time.